Hi guys, weekly market outlook today on the Sunday, 8th of June, after a quite remarkable week. Obviously, Donald Trump, Elon Musk, who's gonna win that situation? Some say they all delete their posts and we are off for a huge bull market run in the equity sector in the next coming trading days. However, if that's gonna be the case, might be a question. In a couple of hours, when markets resume trading, we'll know what's potentially happening and what's up and running this week. And let's focus on the important facts, important data for this next week, starting basically in a couple hours in the East Asian time zone. Core CPI consumer prices on Wednesday might be kind of quite interesting. We had the PCE price deflator, the most important price story, which is kind of giving the impact for the Federal Reserve. And that one has stated basically no change. There was a couple of trading days, basically more than a week ago. But this data here coming out on Wednesday is expected to rise slightly. So far, we have to say tariffs have not caused a strong inflationary pressure in equities and especially also not quite for the US dollar. However, a bit of a rising price motivation could be an important news piece which could push the US dollar to higher levels. Here, we've seen that markets were rather weakening in regards to the price expectation, and we shall see whether this is also going to be the case in the next couple of trading days. Let's observe how markets currently basically run. Currently, there is some room for downside motivation, we might say. Why? We see that this rising trend line kind of really reflected off the high points here. Any breakout, obviously, would call for upside motivation, and any break to the downside would be something important in the euro US dollar currency pair to cause the market motivation to weaken potentially here, as the charting pattern might suggest. This recent week, which is basically over in a couple of hours, has given us a bit of a retracement and a strong resistance area. Retracement as in the market went higher, but dropped to the downside. And despite this bullish looking market candlestick pattern here, we didn't get a push to higher levels. Instead, what we might see is that the market motivation might still take some time. Now, monthly chart, and that's what we are looking at here at the moment, looking kind of quite bullish, right? So upside momentum might still occur, a push higher, sideways pattern, a retracement basically the month of May, and now in June, we might see an explosion to the upside in the euro US dollar currency pair. However, the pound US dollar is basically giving us a similar pattern. Again, the upside here might continue to be quite nicely used, but the market would need to break this high point first. And currently, there's not a strong resistance area. Instead, what we can see on this currency pair, that there is the current market motivation here, which is the resistance which had been broken. Yeah, so that zone in May pushed higher, and now we might also be in for upside prices. Why worry then? Because simply the market sentiment, and that's the general market feel here, is not really quite in terms of bearish US dollar. Instead, what we see is that the technical indicators here, and we can just use our simple charting functionality here in the MetaTrader, which is telling us the market is bouncing off the rising strong support line here, but it was not able basically this current week to kind of push beyond the high point, well, only for a short time, and then hence obviously the market weakness might be the interesting part to observe. So that's the important news piece we see here in this case. We got data again also this coming week, which is from the UK. It's not really something worth a strong consideration. However, looking at GDP data, quite backward looking. It's expected to basically weaken as well somehow. The recent data, or the recent set of data points, have rather been positive here. 0.1, 0.4, we see 0.1, 0.5, right? So they all were rather on the stronger side of things here. The slight deviation in this case, and the two cases here, maybe might be ignored here. However, it's a backward looking indicator, so GDP figures might not be something which are worth a consideration for the bigger, a grander scheme of things here. But again, back to CPI data, if we see somehow the inflationary story in the US is going to kind of push beyond the expectation, 0.3%, say 0.4, 0.5%, that might be something important and could help the greenback, the US dollar, to rise. Pound US dollar weakening. Aussie, we shall look into weakening. The euro, maybe weaker as well. In general, the story might be that Jerome Powell, the head of the Federal Reserve in the US, will remain longer on his path of a rate, well, not hikes, but a stronger rate figure. And there's not much of a basic deviation from that expected. Instead, we might see that if only data kicks in weaker, we would see him and the Federal Reserve cutting rates. But since this is not in the making at the moment, we are really keen on seeing how these data points will come out. So my guess would be CPI data getting a bit of a rise here, and hence obviously the pound weakening potentially as well, because the general story here, we are at the technical resistance area, and I might say that the market is just ready to see a bit of a drop here, causing slight weakness in this market motivation, basically to start downside momentum, which looks obviously kind of something really cool for the time being. Not news related, but market sentiment related. Woohoo! That was what we traded. And guys, again, if you haven't focused and followed up with our website, please tune in to fxstrategies.asia. Our guys, we in the chat, we've debated and we had our buy stop order, which had been triggered quite a while ago. And that was here at 34.30. So we took the plunge here. The market was really breaking higher, 34.30. We can just time it nicely, and we were timing it nicely in this case. 34.30, sorry, that's 40, was our entry point. Our stop loss is way at break even and beyond. We are looking for this market to basically strengthen. The sky is the limit, and it seems like upside motivation now might escalate into our predefined 37, 38 US dollar range. Why that? Simply because, and we talked about this one, there is a vacuum. In this market range, we haven't traded for quite a long period of time. And here we see that only until very much backward looking, guys, this is in 2011, basically, we had traded at these high points. So there is not much of a strong resistance area to come and to basically call the market to lower levels. Instead, we could even see that the market is going to push to the upside even further, and we have quite a bit of a market motivation here to expect upside momentum, and this upside momentum might actually escalate all the way towards higher levels. So you can do the math, tick the boxes here. The US dollar weakness is seemingly playing a huge role. You could find a ton of data points, economic demand, right? So economic, eco-friendly mobility, right? The EV vehicles story is electric vehicles obviously kind of taking a lot of silver in order to build new cars, whatnot. However, we look at the charts, and the charts are pretty much telling us that through the roof, plus the gold-silver ratio is something worth a consideration as well, had kind of weakened as well. And gold obviously much stronger than silver. And currently we see silver is picking up steam. Plus, what we've seen as well is that silver has been rising basically this current week, which is again ending now, but basically the gold price was not able to kind of rise higher. Instead, gold is about to weaken, and our trend line, our triangle formation, was seemingly nicely right here, as we expected the market to basically take a breather. Nicely done here in this case, dear gold market, but whatever this means for us, we have to see how to trade this market accordingly. What we do with gold at the moment, a simple wait and see approach. The market is just based on long-term patterns quite high and could even run higher, but it is in overbought territory, nicely overbought. So a fall, or a rather corrective pattern, is what we should focus on here. The market moving higher, taking a breather, whatever level that might be, before the new upside potential is going to be unleashed. So stay tuned for this. The market sentiment in general at the moment just simply cries for some sort of further motivation, some negative motivation potentially. calling in this case, calling for basically this gold market to basically weaken further. So slightly sideways and even downside motivation in this gold market might be on the cards. Next one up is our next news event, and that's the major big next news event for this upcoming week. Bit of a charter call this week because there wasn't simply too much. Well, there was a ton happening this week with Elon Musk, Donald Trump, Fallout, and whatnot. News events had been shaking around markets, but we come to this in a minute. We got the consumer sentiment, which is important as well, and we had consecutively several months of falling consumer sentiment motivation. Obviously, Donald Trump bringing a ton of uncertainty. Tariffs, right? So consumer uncertainty and the sentiment is obviously weakening. Houses are not being sold. We have a net buyer's market, right? So houses are being sold, but nobody's want to buy. So if you want to buy, now might be a better time. Unfortunately, if you're running as a dear American running out of cash at the moment because of this entire spiral in terms of rising prices, you'll have to be careful in this regards. Anyways, back to the figures here. Consumer sentiment is just obviously kind of turning weaker. This would medium long-term have causing some setbacks for the economy. It's going to be a big harm for the economy, potentially here, medium term at least. But that's soft data. Consumer sentiment data, hard data will come later. The Walmart CEO basically fairly recently told us already, guys, we will need to raise prices because if we buy and procure stuff from China, which is getting pricier due to tariffs, Donald Trump can say what he wants. That Walmart made a ton of money in the last couple of trading years, but still they will obviously rise as the biggest global retailer, raise prices, and hence obviously there might be some negative import in this regard. So consumer sentiment is weakening, and I expect it's going to turn weaker. Whether the figure is going to weaken drastically from the expected numbers might be the question. However, the impact for equities might be the big story here. We were able on Friday to rise again. So else this week would have been a rather net sideways / slightly weaker trading week. But it took the market 1 to 3 weeks in order to take out the recent high points. And now I might say, if nothing bad and unforeseen happens, the market might indeed break towards a new all-time high. We might see the S&P 500 pushing towards higher levels here. As I said, we might see also the Nasdaq breaking higher. Most markets might all kind of give us positive sentiment to the upside here, and the Nasdaq, the S&P plus the German, the DAX also starting again. And again, we are still in our small short position, which we keep on. It's not a big one, but at the moment we expect that there's a retest happening all the way to this zone. So we stay with this little short position, but enjoying our full on equity portfolio with a lot of dividend stocks. Why is it important to focus on obviously the Nasdaq and the S&P 500? Because we want to know what the crypto market is doing. And we saw that there's quite a bit of positive motivation, positive sentiment in the crypto season. We see an outflow currently in Bitcoin from the ETFs. We see major inflows, about $1 billion, if I'm not wrong, in Ethereum, right? So by looking at that alone, we can see that the positive factor might continue. This week has been a bit of a sideways / corrective week here, but we saw Friday, Saturday, Sunday, we saw that Thursday's correction all the way to the 50 moving average has been retraced. The market is now in upside territory again, and the positive sentiment might be due to continue the week ending likely, I might say here, at similar levels, which would mean that the recent resistance area, which is this one here, now acted as a support area, and we could see that hopefully at least the market for those holding Bitcoin is gonna run and rally higher. We see something similar in regards to the sideways zone here in Ethereum, the next one up here right now. But on the monthly chart, I'm extremely hopeful for this token to even run to higher levels, because the market motivation here looking kind of quite positively behaving for this market to run higher. We are above this 50 moving average, and we've closed above this level in May. In June so far, we've not corrected much, and this might mean that Ethereum is going to rally higher as well. My expectation, at least for this token, where else the XRP not looking like extremely cool here at the moment. It's in a sideways pattern. Well, it started to rise somehow today, so that could be something positive here. Solana is rather on the weaker side of things. That's maybe due to the technical pattern here. Pin bar candlestick, and now slightly weakening. That's in for Solana. But in general, I might say Bitcoin breakout, new all-time highs, potentially Ethereum, potentially following with a ton of motivation, just because the big guys have started to show inflows into Ethereum ETFs already. What's up else in other market terms? Oil prices have been higher. We were anticipating the markets to fall. Wasn't happening, so we took a tiny loss. It happens as well in trading. I know, guys, that most of them are billionaires and millionaires and whatever they are doing in trading. We trade the markets with a proper risk sentiment. We win trades. We win more trades than we lose. The trades we win them with a higher gain, and the trades we lose, and there are some trades we lose, are lower. I'm gonna make a video why this year has been an outstanding year for our accounts, because we played the stock market short. We bought dividend stocks quite cheaply, and now enjoying and harvesting, doing our harvest day in, day out. So I'll make a list, and guys, obviously real results. I'll show my real rock solid results over the past 5 trading years, so nobody can say anymore that, hey Frank, this is not true, that's not working. No, everything we do is rock solid analysis, and again, part of that are also some losing trades as they occur along the game. The oil market is expected to move maybe higher. The next resistance zone could be the technical zone here. That's where we would look for potential entry opportunities. But until that happens, we wait and see and remain on the sidelines here in this market. That's at least the oil market telling us at the moment. Apart from that, we talked about it all, right? So the Australian dollar, maybe we forgot exactly. It might also tell us it's maybe ripe for a bit of a correction. And again, the euro, slightly corrective pattern, potentially the pound may be weaker. The Australian dollar potentially also up for lower price levels. And guys, that's it. Until then, I would like to release you from our market outlook. Stay tuned, stay focused. I'm looking forward to chat with you, and there's more videos coming up this coming week, because we have quite a few things we expect happening in the markets, and we will follow up with this together. Stay tuned. See you then. Take care, guys. Ciao.